Hey guys, thanks so much for joining us. We really appreciate it. Moving into a new week here, it's time to catch up on silver and gold. Lots of activity in the precious metals markets. So back on the line is Eric Dubin from News Doctors and the Doc from Silver Doctors. Guys, welcome.
Nice to be here.
Great to be back, Sean.
Hey, it's great to have you back, guys. We see so much going on in the world economy with Greece, the IMF. Zimbabwe has demonetized their crappy Zim dollar. We know what the effects of hyperinflation have racked on the people of Zimbabwe. I think that's coming for the people of the United States sooner than later. And this news from Steve St. Angelo, who emailed me the other night, he told me before he even published his article that he was surprised to learn that India is on track this year to take down 33% of the world's physical silver supply in 2015, and that's on the back of 25% of the world's silver supply in 2014. So much news and so much to cover. Where would you guys like to begin?
That sounds like as good a spot as any, Sean.
Well, India is definitely, going to be a surprise influence in the silver space. We starting of this year, and even in the last quarter of 2014, it was clear that 2015 was going to be a supply deficit year for silver. And of all institutional mouthpieces to speak to that, we had HSBC talk about some 8% supply deficit for silver in 2015. So you're really up with your back against the wall when the primary bullion bank scoundrel or secondary only to maybe J.P. Morgan is talking silver deficit. So it's a very profound shift in the marketplace, and on the back of a 4-year secular bear phase in silver, we're definitely going to flip back, and I believe already have in fact flipped back into a bull phase mode, even though it's sometimes hard to see with all of the takedowns that we have had since October, November of 2014.
Doc, your take?
Yeah, I'd agree. I mean, India's silver demand has exploded this year, really the last 2 years. I think certainly a part of it is due to their restrictions on gold, that the population has shifted a little bit of their demand towards silver, but certainly not all of it. India's always been a strong buyer of silver. I mean, the Chinese takedown of silver only continues to escalate as well, and perhaps most amazingly, while the numbers metric ton wise are not what we're talking about with Chinese and Indian physical silver demand, Western retail investment demand continues to plateau right at the peak levels of this entire bull market, and this is after when sentiment is terrible at the end of a 4+ year correction in silver. I mean, the U.S. Mint has already sold nearly 20 million Silver Eagles. The Royal Canadian Mint is blasting sales records, and we're seeing the same thing on the private side with just monstrous physical silver demand on the investment side in the West.
Well, do you guys find it slightly shocking that India is importing so much physical silver? Because we know that it's in the DNA of the people of India to love, value, and cherish gold as an investment, as wealth, as real wealth. Certainly those people in India are far ahead of our American friends, neighbors, and colleagues when it comes to appreciating precious metals as real tangible wealth. But primarily, we've always been told that their love is for gold. What do you think they're doing with all this silver? Is this all for jewelry, or what are they doing with all this physical silver in India?
Well, a big part of it is actually industrial demand, because they're rolling out a stepped-up effort of building solar energy infrastructure in India. So, I don't have the fresh numbers in front of me, so I can't speak to that, but it is a very sizable percentage that is, in fact, flowing to industrial demand. So it isn't just that whole dynamic of what the retail market is doing there. But, when you consider the worst period of the most high level of import tariffs and the goofy re-exportation plan that they did, where if you don't export 20% of what you're producing as a jewelry producer to markets abroad, then you cannot get a new allocation of gold. I mean, they did some pretty aggressive gymnastics to try to curtail the inflow of gold into India, that all translated to the equivalent of about, just to help people wrap their minds around this whole market shift when it came to the aggressive regulations that the Indian government put on the market. It translated to up to about an additional $300 per ounce of gold vis-a-vis how you would think about it in U.S. dollar terms in North American market. And that was the window, in fact, that was driving, probably about 300 metric tons of smuggled gold into India last year.
Sure.
They officially reported, I guess, something like 850 metric tons or whatever in 2014 imports, but the reality was that they actually were over 1,000 metric tons of gold. So, when you combine that impacting the way the retail market would look at it, and the fact that less gold was actually physically available, never mind whatever price it was on offer, it just, the supply was not there as much as it had been, say, in like 2012, 2013. It compelled the average person on the street, the average farmer looking for some kind of store of wealth to expand their appreciation for silver just by default because they had less choices.
Yeah, and you know what I think is interesting, guys? I think it's really interesting that so many people in so many different cultures around the planet are aware of inflation and hyperinflation. So many people around the planet have suffered through tragedies in their currency, and Americans here were uniquely incubated from that history, really, especially recent history. Our friends and neighbors and colleagues have no idea that inflation can turn into hyperinflation and the death of the currency could happen. It hasn't happened in our lifetimes, but I think it's going to happen. And if you take Zimbabwe, for example, Bill Holter wrote an article on Friday, which we posted, Zimbabwe to Make You Think. And he was talking about the fact that a friend of his was talking about his parents who lived in Zimbabwe when the currency hyperinflated. And these folks were very conservative and had placed complete trust in the system and in the government. And they lost everything. So I guess the question for you guys is this. As we see beef prices hit a record here in the United States, up 30% in the past 2 years alone, as we see all sorts of examples of inflation in the system, at what point do you guys think we're at risk for seeing hyperinflation of our own currency?
That's a really tough question, and there's always been this dynamic going back and forth about, okay, we're going to see deflation first, or is it inflation coming before a system crash that creates possible deflation if the central bankers don't react in time, et cetera, et cetera. I mean, to some extent, inflation will, in fact, probably be driven by a currency event when it comes to the United States, because we still have, the reserve currency status, and, the dollar is making up about 60% of the reserves of the central banks and treasuries around the world. So it has a built-in institutional systemic demand for the dollar. I mean, that's just a fact. But the thing is that the confidence that underpins that can change really quickly. And if it were to do something like that in the context of a financial market accident, say, for example, just drawing a scenario where Greece finally hits the skids and the Brexit scenario is unfolding and capital controls have been initiated in Greece, and everybody in Europe is beginning to look around at all of the other banks within the European system that have exposure to Greek market debt, and more importantly, the credit default swaps that these guys do each other's laundry with when they issue, one bank issuing the alongside insurance against the probability of a Greek bond defaulting, and then the other counterparty basically not having the cash to back something up like that, and then presto, you can have a financial market crash that would spill out all over the world, and in fact could conceivably take down confidence in even the U.S. banking system, because the U.S. banking system has counterparty risk galore when it comes to the Deutsche Banks and all the other banks over in Europe. So that's the scenario that could conceivably set off the kind of situation that John Williams speaks about a lot, where the confidence just gets kicked under, and then all of a sudden you have a lot of dollars flowing back to the United States and too many dollars chasing fixed number of goods, and presto, you get a scenario that's either very high inflation, mid-teens, or even conceivably, possibly, hyperinflation. I mean, if all confidence is lost, and everybody right now has an exceedingly level of high confidence when it comes to the faith that Janet Yellen and her merry band of central bankers and her counterparts in Europe and Japan, et cetera, will be able to, have everybody's back and keep the system going and whatnot. I mean, you're beginning to already see shaking around the edges of that thesis when the German Bund can go, from nearly 5 basis points to like almost 90 basis points in the span of a couple of days or 48-hour period. And the backing up of the interest rates that we see right now, I think, in fact, speaks to the conventional market thinkers, as I like to, refer to them all the time. I mean, not everyone reads Zero Hedge, not everyone listens to programs we produce. They're beginning to look around and realize that, hey, this game of musical chairs does have an end, and that we're probably not too far away from that. And this whole thesis about the Fed trying to regain its credibility by pushing through an interest rate hike in as early as September time frame is right now just jawboning. And I think that if they are able to, in fact, do that, which, you can never underestimate the stupidity of central bankers and being on autopilot at that. I mean, they basically have no winning solution when it comes to what they have to do and what they're looking at in terms of their policy options on the table. So, frankly, I think betting on stupidity is the safest bet here, and that they're probably going to try to do an interest rate hike in September, and then, that may end up being one of the catalysts that ends up taking the stock market down, and we have a monster correction of whatever, 20% in some September, October, November time frame or whatever, and all of a sudden people are going to start talking about quantitative easing again, and that's, I think, what's going to set up the end game. And I am not in the camp that believes that it's a super high probability that everything crashes this September, October, frankly, because, everyone in the alternative investment space right now, for the most part, I think it's fair to say about 80-some-odd% of the people in the alternative investment space at this point are now looking at that window as being the quote-unquote black swan. And black swans don't happen that way. When the majority of people in the marketplace, and I granted, and the alternative asset community is not the majority, but a very large percentage of even the alternative plus conventional market thinkers are now beginning to look at September, October with huge trepidation, and that's not the makings of a black swan. So I think we're actually going to see something that's kind of a hybrid kind of dynamic going on this year, where that September, October time frame is going to have an equity correction of big, substantive move, bigger than anything we've seen since 2008, 20% down or what have you, is an easy possibility given the valuations we have and the idiocy in the interest rate markets beginning to correct itself. But 2016, in my opinion, is really going to be the year that the shit hits the fan, as we like to say.
Yeah. Well, we talk about catalysts for a loss of confidence, and I did this interview with Bill Holter not long ago called "This is How People Will Lose Everything," and we were talking about the bond market. So when you mentioned the German Bund, this is noteworthy as well. On Friday, Zero Hedge reported that Grexit contagion is uncontained. Listen to this. While talking heads have proclaimed any Grexit contagion will be contained, it appears they are wrong. The last 2 days have seen sovereign bond spreads soar 25 to 35 basis points for Spain, Portugal, and Italy. European Union sovereign bond risk is soaring, and they note contagion has been spreading, and it's spreading to currencies. I guess, when we talk about a catalyst for a loss of confidence, the opposite side of that is just a catalyst for insane fear. I was talking to a friend of mine who lives in Thailand, and he's an SGT report reader, and he said that one of his contacts who had some ties to bankers said that these people have never been more afraid. They have never been more fearful, and they're telling everybody they know to buy physical gold, because I think they know that they've kicked the can as far down the road as they can, you guys, and now we see where the road ends, and it ends right at a cliff, and the can's almost to that cliff. There's no more road to kick the can down.
Yeah. We're living in a world now where we have the level of manipulation in the credit markets that basically exceeds anything in all of human history in terms of any kind of manipulation you care to look at. The magnitude of the numbers that were required to create this low interest rate environment and the bailing out of the banks has no parallel in human history. And when you're dealing with the complexity of market systems, it's just an accident waiting to happen. The Fed and other central bankers have no rational out. There is actually one out, and that's a huge tangent and subject that we really don't have time to dive into in full, but it would be the revaluation of the entire global credit system to a higher price of gold. And, if we did that back in 2008, instead of this idiocy of creating the largest wealth transfer in human history to the oligarchs, we would have been in a totally different place now, but that's another subject for a different show.
Well, I think it's a good point, and Doc, jump in here, but I've reported on Nicholas Larkin, the Mockingbird from Bloomberg, who has talked about $64,000 gold in a recent article in which he said if and when China reveals that it has 10,000 tons of gold, which he claims won't happen because his math says they only have 1,000 tons of gold, which is, of course, 2009 numbers. He was making the case for $64,000 gold based just solely on China having 10,000 tons of gold. That may be the repricing you're talking about to the degree that it would ever happen at all, Eric. I mean, at some point, we know there will be a repricing of real, physical, tangible gold and silver. The question is when, and the question is how much, right?
Well, the system has been so screwed up that that really is the only option that makes any sense in the long run, and I think that we will see that no later than 2020, and that's very likely going to happen after what happens in 2016. So I think by 2017, end of year 2017, I mean, it takes a while for these mechanics to actually be put in place.
People forget, guys, that gold revaluation was actually the last bullet in Bernanke's thesis. The same thesis that produced really his famous moniker of Helicopter Ben, and gold revaluation is the last final bullet in the Fed's gun when everything else doesn't work. So everyone seems to have forgotten about that. Everybody, at least that I read, is talking about, well, QE failed. They've tried it 3, 4, 5 times. The Fed's out of bullets.
Well,
and their failure to be able to do anything positive with a so-called regaining of their credibility and the first initiation of normalization of interest rates in the September window, is they're claiming they're going to do at the earliest possible date. That failure will prove that they have no more bullets other than the last bullet. It sets the clock ticking.
Yeah, absolutely. And keep in mind, guys, that the World Bank has now joined the IMF in begging the Fed to don't raise rates, leave rates alone. The world's far too screwed up for you guys to start to raise rates. And we know they can't raise rates anyway. So it's
they might. I mean, if you look at the history of central bankers, they've always screwed things up at the end of cycles. Always. I mean, in the last 30 years, never fail. They fuck things up. So never underestimate the stupidity of central bankers.
Yeah, well, that's true. Hey, I just want to support what the doc was saying, though, about gold being the last tangible asset and being the crux of a reset, because, that's exactly what Jim Rickards has been saying forever. I got a little upset a few years back when I heard Jim Rickards on the Max Kaiser program telling Max Kaiser that actually there's lots of options to keep the dollar strong. There's lots of options we have because we hold the gold for so many other nations. We could just keep that gold. He actually said that to me, which to me, he talks about monetary wars. That's the ultimate monetary war. That's an actual act of war, to seize and keep the gold being held at the New York Fed, the gold that's being held on behalf of other nations. Now, we know Jim Rickards is, he's got close CIA ties. He's got close ties to the Pentagon. So I always look at Jim as being the mouthpiece, to a large degree, for the people who are in control of this economy via the Fed, via the Treasury. So Jim Rickards actually made that statement to Max Kaiser. We could just keep the gold. Well, that alone tells you how valuable physical gold is. They're willing to wage war over it.
And don't forget, too, as well, that he also freely admits in the same sentence, I don't know if he's on that specific show, but he certainly said it many a time, that would, in fact, be an act of war. He recognizes that.
Mm-hmm. Yeah, I wrote about it because...
let's be honest, guys. It wouldn't be the first act of war U.S. is committed in order to obtain some gold. I mean, look at Libya, look at Ukraine.
Right.
Well, that's right. Well, look at
even
the Nazi
the
gold.
quadruple hypothecation stuff and rehypothecation that we do when we lease out the gold already. I mean, it's amusingly enough, the gold that Jim Rickards is speaking about is in fact already hypothecated to the moon, most likely. I want to say one thing about Jim, just in this context of Jim as CIA ex-agent, and a lot of people talk about the stuff with long-term capital management and all, but they actually even forget that he was a lead negotiator in the Iranian hostage crisis. You don't get in that kind of position without being on the inside, and the fact that, he's had deep ties in the finance world, plus that geopolitical incident shows that, you know what, he probably is a CIA agent. But the deal is that he, in all propaganda, as you both know very well, it's always an issue of some 95% speaking truth, and then you inject the occasional payload of propaganda significance. And when it comes to Jim Rickards, I frankly, most of his thesis is actually correct in my estimation. One of the things that I've noticed that he frequently does, however, is he does speak to the fact that Fort Knox has the gold, but it may be leased out a bit, and New York Fed Depository has the gold, it might be leased out a bit. That's the kind of thing that speaks to the propaganda payload. And he also frequently makes a case, very erroneously against prima facie evidence that he certainly can understand given his intellect, that China is the primary short, trying to keep down the price of gold so that they can accumulate the gold that he wants, that he's in his thesis says is going on with the acquiescence of the Western powers, such that China can have an equal percentage of gold relative to their GDP as the United States. Half of that thesis is correct. The other half pointing towards China being the main orchestrator of the manipulation versus the prime culprit, the United States Treasury and the Exchange Stabilization Fund and all of the Western interests that he's trying to deflect the blame against. That's the propaganda payload that Rickards is delivering. People attack him. People try to take him down, and they don't even have a full appreciation of some of the things that he's saying that's correct. I mean, when you look at individuals and you try to assess their messages, it's important not to just throw the baby out with the bathwater and have this kind of like knee-jerk reaction of, oh, so Rickard said something, therefore it can't be true, therefore I'm not going to let it into my brain and analyze it in the context of what's going on in the world. I mean, frankly, a heck of a lot of commentators and pundits and analysts in the precious metal space have made that mistake.
No, I totally agree. And in fact, we continue to post Jim Rickards' interviews, and anything interesting he says, we'll typically post, often with a caveat, though. And I totally agree with you about that.
Everything is in context. I mean, that's really the bottom line. It's context mapping. Even a scoundrel might have something good to say once in a while.
Yeah.
And I kind of get the impression actually that Jim's a good guy and that he's trying to help people too. I don't think he's all. I think he's kind of a white hat when it comes to his role within the intelligence agencies. Not some kind of guy that has a really deleterious objective and whatnot. But that propaganda payload about protecting the U.S. interest as the primary culprit is very obvious, at least to me.
Yeah.
I think that's what the spin that Jim Rickards represents.
Yeah. My whole goal with Jim Rickards and posting his material or calling him out on the stuff that strikes me as really shocking that he sometimes says or writes is that I don't think he's necessarily malevolent. So I would agree with you, and I think there is a lot of great information that comes from him. We just have to understand his history, and I've gotten into this history about Jim Rickards with Rob Kirby before, because Rob Kirby is the one that told me about the long-term capital management relationship with Rickards, and then I did some more research, and I thought, okay, this guy is a made man. He's a little bit like these other guys. George Stephanopoulos, who just signed a $105 million contract with ABC News just prior to giving $75,000 to the Clinton Foundation. And then, of course, that was revealed. Did he lose his job? No, he's a made man. He's a mockingbird. He's going to toe the line for these people. He used to work for these people. He used to be in the Clinton White House. And now he gets to be a mockingbird at ABC News. We just need to keep our eye on these people, and we need to understand who they are and what their history is so that they can't deceive us. Because, I mean, at the end of the day, that is their job, is to deceive us. Not necessarily Rickards in totality, but guys like George Stephanopoulos, people like Anderson Cooper, the standard mockingbirds that won't tell you the truth about the secret TPP. In fact, they won't mention it at all, even as Biden lobbies for it openly. And I think that's the most shocking part about all of this stuff, is that if you want truth, if you want truthful, honest analysis, if you want to learn about what's really going on, you have to look to the alternative media, because you're no longer going to get it from the mainstream media in this country. I mean, my God, we have our backs up against the wall here, guys, as you well know. Hey, before I lose you, I want to talk about the Comex. Does anybody have any input about the Comex possibly having received a physical gold bailout from the feds? We posted that Avery Goodman article, then I saw Turd Ferguson jump in and say, hey, this isn't new news. We know that these guys don't have the gold. We know they're settling in cash. They've been doing it for a long time. This is not new news. Do you guys see smoke coming from the Comex warehouse, or is this just more of the same?
Yeah, there's smoke there. It's just always a question of how much smoke and where they are and how much flexibility they have in terms of game playing. This whole cash settlement thesis has been around for 3 years at least, and there never has really been any concrete documentation of it at all. So it's it's the kind of thing that you know just based on price action and the changes that are reported in the commitment of trader reports and the situation in terms of overall demand worldwide and the depletion of gold supply from vaults from the GLD, from lower on hold or on-hand inventories within the Comex system and the LBMA system and all that, the cash settlement that's probably going on. But in the final analysis, it really isn't even that important to substantiate the degree to which that's happening, because there are things that we actually do have 100% documentation on that point to the fact that we are running on a system that at some point it's not going to be able to have formal price discovery because it's going to destroy the confidence in the market system and turn as well. One of the catalysts will probably be industrial demand. We may, in fact, even see that this year in silver because even HSBC is talking about an 8% silver deficit position
Right.
of supply not being able to meet demand, and then the industrial purchasers need the silver.
Right.
$5-10 worth of silver and $1,000 appliance or a small amount that goes into the electronics for an automobile or whatever is a trivial portion of the expense it takes to produce those products, and they're not going to care if silver is $35 an ounce to liberate some more supply and resuscitate the mining system worldwide because we're way below the cost of production.
Well, and your point's a good one too, Eric, because palladium, it was once, I think, $100 metal, maybe less than that even, and when it goes to 800,000-900,000, nobody notices. It still gets used in catalytic converters. It still gets bought up by those who need to use it. Silver will be the same story. And I guess my question for you, Doc, is do you believe we've hit peak silver? I mean, my God, with India alone taking down 33% of global physical, how much longer can this go on when the mining companies have been absolutely decimated? Have we hit peak silver?
I mean, it's hard to say. It's a lot easier in retrospect to look back. We're certainly near that level. And certainly you're going to see that if we do get any further downside in the paper markets here this summer. I know we just talked to metals markets, and Eric thinks the summer's going to be a pretty promising one for the metals. If we did see any further downside, it's going to be really hard on the miners. And yeah, I mean, the physical demand globally has been exploding, continues to explode. The demand in the East is just off the charts. And as I was commenting as well, the investment demand in the West is maintaining the plateau peak levels for the whole bull market. So even though the paper price is off over 50%, the investment demand in ounces has maintained its plateau. And if we do see any sort of excitement return to the market, because, I mean, let's face it, right now, sentiment is at late 90s levels. It's just terrible in the market. So if we have any sort of resumption of the great 20-year secular trend, which looks like perhaps has begun, I think Eric was just talking in our show that he thinks it has begun, even though silver's been hit a few times over the last few months. Once that's underway and well understood, and you start to see some excitement, and again, as gold and silver are giffen goods, you're going to see investors start to get excited and chase those metals as we see continued moves to the upside. And really what we're seeing now investment-wise is nothing to what we'll see in the mania portion of the bull market.
Yeah, the giffen goods phenomenon is definitely a Western buyer phenomenon because the paper chasers here are the guys that come in and trump the ability of the cartel to smash metals downward. And in fact, that's what we're seeing in the last 6 months or so since the November period low. And if you look on a 5-year chart, we're in a very substantial uptrend that hasn't been violated yet, despite the fact that they keep crashing stuff down. And in terms of peak silver, if you roll back the pages of history 100 years, the kind of ore grades that were coming out of mines back then, there's like 10 times as much silver per ton than what we're getting now, on average. And silver mines are harder to come by in terms of their discoveries these days, and the amount of use of silver is an order of magnitude more from the industrial side. And once the investment demand comes in, boom, the only thing that will be the saving grace is that the higher prices would elicit more supply coming to the market, and it kept this beach ball underwater so long that that's just going to have to happen at some point, because there's not enough silver to go around to meet both investment and industrial demand. And if you take away supply from the industrial demand side, then you end up having goods not come to the market, and that's not tenable for any length of time.
Yeah, that's right. And just to recap, we see record demand for physical and investment form in Canada, in the United States with American Silver Eagles, and literally there over in India. I mean, that is really astonishing to me that India is on track in 2015 to take down 33% of all physical silver on planet Earth. Hey, Doc, you guys have been such tremendous supporters and partners with us over at SGT Report. Guys, you can click on the Silver Doctors banner at the top of the site to get physical silver and gold to protect yourselves from the nightmare hurricane, economic hurricane that's coming our way. Doc, can you tell people about any special offers or anything you got going right now over at sdbullion.com?
Thanks, Sean. I think we first let your listeners know the last time we were on that we were starting a Silver Eagle special of $225 over spot any quantity. We haven't stopped that, even with the dip in the market. We're still selling Eagles at $225 over any quantity. Silver rounds, I think we have OPM rounds 63 or 65 cents over any quantity, something like that. So there's a lot of good deals in the market right now. Well, silver is at, well, I guess not quite at, but near recent lows. Premiums are still at some of the lowest levels in years. So in my opinion, it's right now we're looking at one of the best times to acquire physical metal and add to your stack since probably late 2008, early 2009.
Yeah, I totally agree. And, you know, as my friend Chris Duane always says, we've come to a place in time where the market manipulation and the paper manipulation of these prices makes it so you can only value your wealth in terms of ounces owned. You really can't, I mean, you can if you want to, but you really ought not look at the paper price and then multiply the paper price by your ounces, because we know the paper price is 100% fraudulent. We know these markets are 100% fraudulent. And I would encourage everybody to check out sdbullion.com. Click on the banner above, because $225 over spot for any quantity, that's the important part of the deal, any quantity. If you can only afford to buy 5 or 6 or 8, 10, that's a great deal, because so many of the other vendors out there, they want you to buy a monster box or at least 100 ounces to get that discounted rate. Hey guys, I want to thank you so much for your time. You've been very generous today. We've put in about 35 minutes here with the doc from Silver Doctors and sdbullion.com, and of course Eric Dubin from newsdoctors.com. Guys, thanks.
Thank you.
Always a pleasure, Sean.
Always a pleasure, my friends. And guys, thank you so much for tuning in and supporting us over at sgtreport.com, thelibertymill.com, and thephaser.com. Real news 24/7. Check out that sdbullion.com banner ad at the top. Thanks for listening. Have a great week.